Good afternoon, traders. My name is Shogun Chat247. I train traders how to trade in harmony with the market. Today, we're going to look at the portfolio selection. The idea is I have a scanner here, which is just a basic trend scanner. So what I normally do is I combine two time frames, one as a major time frame, one as a smaller time, as a mini time frame, basically. So we're looking to follow the trend direction on the major time frame. So what I mean by that is this. So if you look at something like this, okay, if this is a major time frame, let's say this is the 15 minutes chart, okay, and this is the M1, okay. The trend is going up here, but it's pulling back. Once it's going up, it's coming down, it's going up, it's coming down. So the idea is to capture the trend when there has been a pullback, but the direction is still to the upside. So with the scanner, I'm trying to scan a major uptrend on the 15 minutes chart and a major downtrend on the 1 minute chart. The idea is if the trend did not fail on the 1 minute chart, I'm expecting a continuation move after the pullback or after the trend, which is a strong downtrend on the 1 minute, but it's actually a pullback on the 15 minutes chart. The idea is simple. Okay, so I've done this already. So we have the uptrend and we have the downtrend. Couple of pairs we're going to look at this afternoon. So the first one is the Euro US dollar. So as you can see, the Euro dollar has been going up slowly, but price has now come back down. And that is what is showing the downtrend on the 1 minute chart. So I'm going to measure because I'm trying to capture the retracement. So price is now in the buy zone. How do we find that out? The simple way to do that is to use the Fibonacci. I'm going to remove this so that I can easily draw on here. That is our buy zone. Okay, and you can see price is trading here. And now my job is to try and see if I can take this trade. Then the next one is the pound card. Let's remove the drawing. Okay, we measure from the low to the high. Price is in a buy zone, and this works. You have to make sure you know how to do the selection. Uh, that's the buy zone. The You see how fantastic this is coming. This is working. We come here, we draw from the low to the high. Price is in the buy zone. We're not going to jump in and buy this trade. We can execute flawlessly from a smaller time frame. We can use 5 minutes on 1 minute chart. It doesn't really matter. Okay. Um, we don't have to do this one. Then we do the euro. Okay. This is telling us is a downtrend, the euro Aussie. So we measure from here to this point, and you can see here this is actually going on now. This is that's the move there. Okay, that's the first thing we want to do. So we have this 1, 2, 3, 4, 5 pairs to look at, and we can choose and pick which one, or pick and choose which one we would like to put our money on. So that's the first thing we do. So let me set up the MetaTrader chart. Okay, so we're going to be looking at the pound dollar. I think that is more technical. So we want to trade the pound dollar. Okay, this is the pound dollar on the 5 minutes chart. Okay, and we can do the same thing we did by measuring the low to the high. You can see the trend. The wave structure is 1, 2, 3, 4, 5. That is the end of the wave structure. If the trend, let's change the color to this color. Okay, the failure point is this two here. Okay, as long as the price stays above the 2, buying is still allowed. So price has come nicely into the buy zone, okay, which we've already measured that on the trading view chart, and we want to execute the trade. So don't chase this. We always look for the second pass. What I mean by that is this, okay? For us, if you are buying, you want to buy, you want to see this happen, a first move, then we want a move that failed to take this low. It may come below here, but as long as it doesn't close crazily below, maybe one candle is allowed. I like to use 1 or 2 candles, but the close must be so if that's the first move, let's say like that. Okay, this is messy. That's the first move. That's just an indication. We want the second move to come in. It may close below, but not like crazily. Sometimes I use the average true range of that pair to see if the price closed within the average true range pips. Let's say the average true range is 5 pips. As long as we don't have the candle closing 5 pips below this low, I will still take that trade, because that could still be a spring, okay, for a move to the upside. It may not even close below here, it may come close to this low, and we start to see a turnaround, and that is what we're looking for. Sometimes you may not catch it. Sometimes the price will not give you the opportunity to capture that. So this is the pound US dollar. The other one we have to check is the, let's see the list again. I have the dollar Swiss, I have the Aussie card. So let's check the Aussie card. And as you can see here, the Aussie card has violated the trend. Price has come below the 2. Okay, so that trend on the 15 minutes is actually not a strong trend, because now we've seen a violation to the downside. We can check another pair, the pound yen, very strong. Look at this one. Look at that retracement was minimal, and this may be a good trade to take, because this is the end of the wave structure. Let's look at this. We measure from here to here. Uh, price broke above the T2. We don't have to chase this one. Okay, this thing is breaking momentum high. It's already left the station. It's going to continue. Euro US dollar could be another one. The two did not break, so we have a potential to capture this one. So I think is the pound and the dollar and the euro are the only pairs we can trade. So what we are waiting for is a pullback. Okay, the pound is very strong. You see that? So this move is a good move, but we need a pullback. You don't chase it. Let the second pass give you the opportunity to capture the move going to the upside. So we're not going to chase this thing here. We're going to be patient. And now we have 2 pairs to trade. We have either the pound dollar or the euro US dollar to buy, all right, as long as the price gives us the opportunity to do so. Okay, so we need to see a pullback. We turn to 5 minutes chart, and we can delete the first Fibonacci, because that buy zone has been bought. Okay, let's make this chart a little bit clean. I need this. Then I'll delete the drawings. Okay, then we can capture this move here, because as you can see, this is actually a strong participation from that zone. So, and I've seen the price coming down, so I'll measure this low to this high of the pullback. And what we want to do is to capture this as a buy zone. Okay, we want the price to come inside here without going crazy. It may come the like I explained before. Where is the paint? Okay, this is what we have. Price is coming down. It may come down here to touch this low, but once the price start to turn back to the upside, that's where we want to buy from. Okay, so this get trading is all about waiting and be patient to get involved. We don't want to chase the market. Okay, so we've seen two candles down. We have, so we can now start to look. So basically, I use this chart to execute trades because I like to use volume as the final determinant whether I'm buying or selling, because you have to put yourself in the shoes of those who are making money at all times. So from here to here, the people that made the money are those that bought from the low, and they will come out at the close below the volume bars, or we could say the retracement is valid below this volume bar. Okay, but also we have to be aware of, now we've seen selling coming into the market. Now we see a down volume, okay, on this candle. And for me, in order to buy, price must close above a volume bar. So for instance, if I was going to buy this one, I will take a trade above here at the close, because this is a down volume. We can buy here, but because we didn't take the trade here, we're trying to find a pullback, and now we've seen a pullback. And even if price did not come into this buy zone now, I can still take the trade because the initial the 15-minute buy zone has been traded, okay, from this low, and now we've come down to a 5-minute chart to try to capture the pullback that will take place, which is currently happening now, and we want to buy. So now any close above a down volume bar is a buy opportunity, is a buy for me. It's, I don't have to think too much about that. And also I have to pay attention to the wave structure, because we can see after this 5 momentum high, the wave structure is painting 0, 1, 2. The trend is not confirmed yet. The downtrend is not confirmed until we see a 3. Okay, if the price come down and break this low, and we saw a wave structure, a momentum low 3, that means buying is no longer allowed. Okay, buying is no longer allowed. That means the trend has changed to the downtrend. So we don't want to be buying when the trend has changed down. But this is still a potential. Uh, this hasn't been confirmed yet, so we still have an opportunity to buy. So I want to save some time on this video. Okay, so we have a lower buy point. Well, this is a bullish volume. Okay, buyers are coming in, and if we have a close above here, we can buy, and we have a confirmation here, the eye of this bearish candle. Okay, so we just have to keep an eye on it. We'll keep watching it. The price has satisfied. Let's do this. We have a valid pullback. You can add the 0.6. You can see that. So if we have a close above here or here, the buy is valid. So I'll put it here. Okay, we've taken the buy. This took a while. You can see price actually came retraced below the starting point, but the the trend was not violated because this is the two, and in looking at this you can see this is 0A, B and C as a pullback. I was mentioning the low here. If the price comes and close below the low, let's look at the, see that, and that's exactly what happened. You can see, and basically the people that bought here, they've knocked them out. That is what happened, and now we are buying. Then we can use the low of the two, this low here, as the stop loss. Okay, and looking to target the, excuse me, we can use the extension and looking for a confluence between the extension of the whole move and the retracement of the setup move, basically. So we're looking at confluence. There's a confluence here, there's a confluence here. So those are the two areas, this here and this here. Those are two likely area. Price may have a little bit of difficulty here because this can be constituted to be an hold up price, but that is the area we're going to be looking for, those two areas there for targets. Okay, we've seen the response at the C level. So what we're expecting now, let's look at the MetaTrader. So we've taken the trade here. The stop loss is the two-way structure. Okay, and if we dissect this, I said before, you put yourself in the shoes of those who are making money, and those are the people who are selling. Then we use the down volume as the proxy, basically. Here they made an attempt to knock them out, but price did not close. You can see even this candle went all the way there, came back and closed lower. But as you can see, that's the last down volume here, bar, and we closed nicely above it. I actually took the trade on this one here, but the idea is to be patient, to wait. This one, I think we started this video around 1 115 or 120. I can't even remember when we had a strong move then, but we we stuck to our gun. Basically, we said no, we have to wait, and we waited, and then we can take the trade. It the doesn't mean everything is going to work out the way you expected it to work out, but you have to follow the principle here, which is the probabilistic principle. Every moment is unique. Sometimes we capture a trend in this area here, okay, maybe here, okay, but this time it was here. So even though the price looked the same, but every moment is unique. The edge is only an indication. It doesn't mean we have to take the trade. There's a random distribution between wins and losses. The ones that you win some, you lose some. But if you follow the same principle and you have a high probability edge, After a sample size of trade, like 10 trade, 20 trades, if you follow the rules